If you're somebody who finds yourself constantly asking yourself, should I be a long term investor or should I be a short term investor? Long term investing, you're investing in things like index funds, you're investing in things like growth stocks, you're investing in stocks that have a fundamental basis behind the reason why you're investing in them. And you're investing in them because you believe that in some point in the future, right, some long term future point of time, that stock or equity that you're investing in is going to increase in overall value. That's what a long term investor does. Long term investors, typically, these types of people, they're older people, right? They're people who are investing for their retirement. They're people who are growth stock investors. They're people who are just don't have enough time on a day to day basis to focus on the market and focus specifically on what's happening in the market, which is definitely a solid option to make money in the market. But on the other hand, so is short term investing. What is short term investing? Short term investing is anything from swing trading to day trading. It's any kind of trade that you're taking basically that has a less than a week outcome, right? Where it takes less than a week for it to play out a certain way that you're expecting it to. And then some short term trades could even last a couple months, right? But for the most part, it's shorter term, right? You're not trading on the year, a year or two time frame. You're trading on a week to maybe even somewhat of a month basis. And the thing with short term trading, again, the people who do this are typically day traders, swing traders, Wall Street traders, hedge funds, just any kind of major player with a large portfolio that's able to inject a good amount of liquidity into a specific position and end up swinging that position or day trading that position as the value moves up maybe 5 to 6 to 10 to 20%, right? And then day trades can obviously be a lot more than that, as we know. But one of the questions I see very often with people who are just getting started is which one should I do, right? Because there's benefits to both and there's disadvantages, right? Long term investing is a lot safer, it's a lot less risky, it's a lot more easy to kind of get access to, right? You don't need to necessarily know technical analysis to be a long term investor. And I would even argue you barely even need to really know fundamental analysis to be a long term investor. Fundamental analysis only really matters when you're getting into growth stocks, things of that nature. You're not doing fundamental analysis on an index fund, right, or an ETF. But when it comes to long-term investing, that's kind of the whole point of it is that it's long-term, right? So if you want to make money right now in the current day and age, in the next 24 hours, 48 hours, long-term investing is probably not how you're going to make that money. And you're going to make money probably eventually long-term if you make a sound investment decision, if you invest in something that does end up having value, and ETFs are a great example of this. But it's going to be slow, right? The S&P 500 as an index averages anywhere between 8 to 9% per year in overall gains. And because of that, we don't see this, we don't see those kinds of moves happen on a day-to-day basis unless something crazy is happening in the market, right? So, you can shovel money into this position over the course of a year, over the course of 2 years, however many years you want to invest in. And as you shovel money into that position, it'll grow and your gains will ideally compound as well, right? And things will go up and up and up. But that initial number, that initial 9 to 11 to 10% number of growth that you're expected from this position, that doesn't change, right? So, what's 10% of 10,000? What's 10% of 50,000? What's 10% of 500, right? Those are the kinds of numbers you have to think about when you're in long-term investing. And I think long-term investing is great. I personally am not a full-time long-term investor, but aspects of my portfolio are based out of long-term investing. What do I mean by that? Basically, I have my day trading account, which is a lot riskier stuff. And then for long term, I have my long term positions, which are, my ETFs, my retirement portfolio. I even have some dividend income portfolio stuff that I do on the side. And those are things that I just don't plan on selling immediately. I just plan on buying them and holding them until a future event that I expect, some kind of higher value, or I just, I'm going to sell them or whatever, get the gains in the meantime. But that's long-term investing. And I think if you're brand new to the stock market and you don't even know what a stock is, let alone what options are, that's probably where you belong. That's probably where you should live, is long-term investing. Now, if you're somebody who does have a little bit of experience with the stock market, does know a little bit about it, and has somewhat of a feel for what options are, I think short-term investing from and this is a big part with short-term investing, is the mindset that you have to have with short-term investing, I think is maybe more up your alley, especially if you have, let's say, you make $10,000 a month at your 9 to 5 job, right? Or less than that. I'm just using that as an example. You can make less than that. It's whatever. You make that much money. Let's say after expenses, after putting away your money into savings, after everything you'd have to spend on a normal day-to-day life, right? The normal life expenses that you're expecting. Let's say you have 2 grand left over, right? 2 grand of like disposable income or play money, whatever you want to call it. What you can do is you can take that money and then essentially insert it into the basically into your short-term portfolio. Snap there because it helped me thought. You basically put that into your short-term portfolio and you say, this is what you have to say, and do even less than 2K, do even less than that if you're scared about that big of a number. You say, if I lose this money, it is what it is, right? If I lose this money and I never see it again, then that's no skin off my back. This is play money. I'm gambling, right? Because that's what options is. And in short-term investing especially, you should be using money that you're absolutely only willing to lose. Like you should not be using money that you're not willing to lose. If there's any amount of money that you have in your account where you feel like an emotional reaction, an emotional response to that money being in that account, and I want you to like simulate this in your head. Think about how you would feel if you lost that money in that position, right? Let's say you take a trade with that money and you lose like 50% of your account. How would you feel? I want you to think about that feeling. And if that feeling isn't, well, it's okay, this isn't that much of my income, I have all my other stuff taken care of, then okay, great, you're probably at a good number. But if it's a feeling of, oh my God, I just lost so much money, like that was so much more money than I was expecting, how am I ever going to make it back? I have too much money in this portfolio, that was like all my rent for next month. That's where you need to take a step back. Like I said, long-term investing is easier and it's less risky. Short-term investing is a lot more difficult. It's a lot more risky, but the quickness to making money, the quicker acquisition of actually making gains is a lot faster, and it can potentially be a lot more, right? We've seen day traders on here make anywhere between 100 to 200% a week, right? Which is incredible given the fact that, and that's consistent, right? That's not just like a one-off thing and then the rest of the month they make 2 or 3% or they make nothing at all, right? I've seen traders who are competent enough and consistent enough generate anywhere between 2 to 400% every single week, which is incredible. And they're consistently compounding their portfolios and making good money doing it. But it takes time to get there, right? You're not going to be a master trader overnight. You're not going to be an expert. It's going to take some time. So in the meantime, especially if you're just getting started in learning, do not trade with more money than you're willing to lose. Put some money in there, put some play money in there, and mess around with it a little bit. If you lose it, okay, who cares? It's no different than if you went to a casino and played blackjack, right? That's kind of the way I've always looked at it, and it's kept me from not having awful feelings and emotions on a day-to-day basis when I lose money or whatever happens. It's just easier that way. So if you're at your very beginning stage and trying to figure out what you should do, that's what I'd recommend. And the next thing I'd recommend too is to join our Discord with the first link down in the description. It's how you're going to get access to daily buy and sell alerts, free education material, weekly group calls, and an amazing network of top traders. Also, one of the other things that we do in that community is literally give you our entries, our exits, our stop losses, our take profit levels. We tell you exactly what we're trading and what we're doing. So if you want to learn from somebody like me or from Zach, who also makes videos on this channel, we've been trading for 6+ years. We've been doing so profitably and we have a very fun time doing it. And we like what we do, right? We've been doing this for a minute and we know a thing or two about trading. So if you guys want to learn from us, hit the first link down in the description, join the Discord. You won't regret it. Thanks so much for watching this video.